Hey, good morning, everybody. So today we're gonna talk about a little bit, option. Basically, we're gonna talk about some options that real estate investors like yourself, have in regards to selling your property and deferring capital gain taxes. So again, full disclosure, I am not a tax accountant or claim to be. I'm not an attorney. Anything that you hear today, please check with your attorney and or tax accountant CPA. I'm a real estate broker. I've been doing real estate for about 20 plus years. But other than that, everything that you hear today, please double check with your tax accountant and or your attorney. Just want to give you a brief overview of what's happening for the past week. We know that, with all the violence that's going on, our prayers are with all the families that has been affected, that is going on in this world. At the same time, we also want to make sure that everybody is safe as far as wearing your mask and keeping your distance still, even though we have, I heard this morning is about 100 million shots of COVID vaccine already. So we're ahead of schedule, but again, don't be complacent. Please continue to wear your mask and continue to keep your social distancing so that way we can, get out of this as soon as possible. So let's get into the nitty-gritty stuff about what we're going to do today. Today, our presentation is nothing new. I'd like to say thank you to Tammy who, brought this to my attention, that we want to bring this to all our agents to, basically, bring our knowledge to the community. So that way you guys have options instead of just doing a 1031 exchange. So many of you know that the 1031 exchange is basically a tax defer when you sell an investment property. Well, there are stipulations on that. Next week, I will be doing a 1031 option. So we will see another option why you should not choose a 1031, but I'll give you an overview of what 1031 is all about as well. So first thing first, let's get into it. As you can see, mortgage interest rate has risen slightly, 2.875 for conforming, and your let me see what it is right now, 2.875 for interest rate, and their APR is 2.915. So you can always call us or also did in the chat box any questions you may have during this session. I'll be happy to answer them and, in the chat box and our phone calls. Okay. So phone calls 408-416-8260, 408-416-8260. So let's get into the presentation. Again, this is a presentation for an option beside 1031 exchange. Okay, so basically we call it a monetized installment sales, or M453. So M for monetized, 453 is an IRS code 453, just like a 1031, your IRS code 1031. So let's get into our capital gain tax. So here is your capital gain tax in your state. So we got this map through Tax Foundation. Again, this is in 2016. I know it's kind of dated, but I mean, this is what we got from Tax Foundation website. I want to bring this to you. So we are in California. So in combined state and local, you're looking at, state and federal, you're looking at about 33% as far as capital gain taxes in your state. Now, you can have properties in Texas, Nevada, Arizona, Utah, New Mexico, Oregon, Washington, things like that. So this is, again, this graph or this picture that you see is in 2016. So it has changed quite a bit. It could go up and down a couple percentage point, but check with your local tax person to get the most updated numbers. And the reason why we provide this is just to get you an idea of, what's going on and how much, tax implication is as far as selling and buying real estate as an investment. Okay. So M, monetize installment sales. So 453 is a tax code for installment sale. M is for monetize. Again, I just want to reiterate this. This is nothing new. So I don't want you guys to think this is a brand new thing. Okay. 1 second. Okay, everybody see, okay, so any privately held asset can be sold using M453. So this is the difference. So privately held, so you can say I have a business, I want to sell. I have a property I want to sell. I have a, a app, that I sell on Apple Store or the Android Store, that I want to sell that asset. Anything that's privately held, we can use M453 in this sale. Okay. M stands for monetized, like I said, and is copywritten and trademarked by the DCA, so dealer in capital asset, which is a qualified intermediary. So basically, a DCA is a third party that's involved in this transaction, and I'll make sure that it'll make more sense once we go through all this. Okay. Oh shoot, I just dropped my water. Apologize, guys. I didn't want this. Sorry. 1 second. Shoot, that's okay. You know what? I just spilled some water. That's okay. So 453 is the IRS tax code for installment sales. We spoke about that. This was created 25 years ago by Harvard educated attorney named Stanley D. Crow. So I want to give a credit for Stanley D. Crow. Mr. Crow has created this M453, basically using the 453 tax code and kind of figuring out how he can save all his client a lot of tax money or tax deferred money. And my hats go off to Mr. Stanley D. Crow for that. Please consult your attorney and tax professionals. Again, anything you see today is information that's all over the web. I'm just consolidating this information. I just want you guys to have an option, or have an option to give to your client when they want to sell a personal property that they need to do a tax deferment. So I'm going to give you a quick example. I'm going to go really slow because it took me a long time to do all this. Again, these slides, I'm mimicking it from another I guess you say presenter. But basically, a seller has a private property, or a private asset, we want to call it. So let's just say, because we're in real estate, let's say I have a piece of property, investment property, I want to sell for $1 million, right? So I'm the seller on here. So we have a buyer who want to buy that property for $1 million. Okay. So seller and buyer must have an agreement and is in escrow. So basically, the seller want to sell their property for $1 million. A buyer say, okay, I'll buy your property for $1 million, and they have an agreement, purchase contract, and everything else, and they are in escrow. Okay, so let's look at how this works. So this is how it works, where the DCA comes in. Again, the seller sells the property for $1 million. The buyer want to buy the property for $1 million. We introduce a dealer in capital asset, a DCA, in basically the third party who is a qualified intermediary. Okay, so they are a qualified intermediary for this transaction. So let's look at how many steps, or let's look at the first step as far as how this M453 works, that it can save your seller, or tax defer your seller a lot of money. Okay, so the step one is basically the seller. Again, remember guys, the seller and the buyer already have an agreement. They're already in escrow. Okay, so now the next step will be the seller sell the property to the DCA. Okay, the DCA will give, or the seller gets a note from the DCA, an interest-only loan for 30 years at a rate of 5.7%. Okay. And trust me, I'll go into the math in a little bit. Right now, you guys can take a picture of this and kind of write some notes or however you want to do it. But I promise you, after the slides, we will go through the math and it will make sense. Okay. So right now, you're looking at the seller will get an interest-only note at 5.7% for 30 years, okay? So the DCA pay the seller every single year $57,000 of interest only, okay? So the seller gets a 1099 at the end of the year for the interest received, okay? So that's what we mentioned. Now, step 2. The DCA will provide a private lender who steps in. Step 2, the private lender will basically DCA introduce the private lender to the seller, and the private lender will lend 95% of the sales price to the seller in the form of a business loan at 6% interest only for 30 years. So keep this, you can take notes, write it down. So people say, hey, you know, I sold for $1 million, so why am I getting only 95% back, right? So again, you will see how it all plays out. Just keep this in mind. We'll do all the math in a little bit and it will make sense, okay? So basically, I want to recap what you just see right now, what you just saw right on the screen, okay? Seller and the buyer has an agreement and is in escrow to sell the property and buy the property for $1 million, okay? So we have an agreement. Second thing is the DCA steps in as a qualified third-party intermediary, will give the seller an interest-only note at 5.7% for 30 years. Okay, so the seller received $57,000 of interest from the DCA. Now, all of a sudden, the DCA will introduce a private lender, will lend the seller 95% of the proceed, which is $950,000 in this example, and the seller will have to pay 6% interest only for 30 years. So if you take 6% of $950,000, it equates to $57,000 of interest only. So if you can see, the seller is receiving a $57,000 of interest from the DCA, but then the seller need to pay back the private lender $57,000 of interest for 30 years. So those two are a wash, okay? So keep in mind that everything you see here is all paper transaction. It's not where the DCA every single month, pay the seller a check and then the seller receive the check and then the seller write a check to the private lender. So none of that happens. The private lender take care of all the paperwork, and I will go more in step 4 later, and you will see how it makes sense. Okay. So now we agree with, we see that step 1 and step 2. So let's go into the what the seller gets. So the seller will get the following. So the seller will receive a 1099 receivable for $57,000, right? On $1 million at 5.7%, that's $57,000 of interest. The seller will get a 1098 ledger statement payable for some $57,000. So those two kind of a wash, right? They receive and pay out $57,000. The CPA or your tax accountant will file a form 6252, which is for installment sale. So when they file that form, the IRS knows that you did an installment sale, and then whatever you receive and pay out is kind of a wash. They understand that, and that's how it all ties in together. So now let's look at the buyer on step 3. So step 3 is that the DCA, right, to the buyer of $1 million. So remember the $1 billion. DCA now sell the asset. Remember, now even though the seller and the buyer has an agreement, the DCA has that asset. They sell it to the buyer, same amount of money, They don't increase the sales price or anything like that. Still $1 million. So your agent might ask you, hey, Michael, didn't the seller and buyer has an agreement already in escrow? And then now how can the DCA sell the same asset for another $1 million to the buyer? So does that mean the buyer paying $2 million for one property? No. So I'm going to give you the meat and potato in a little bit. So the DCA will receive $1 million in the proceeds. So remember, the DCA is a third-party intermediary. Okay, so they're the third party in the middle, or you can call a middleman. Okay, for layman terms. So the middleman will receive the funds. Okay. The buyer will sign a cooperation agreement for recourse to go back to the original seller if any misrepresentation. So what the buyer will sign is basically saying that everything that the seller said and the buyer said is true. Remember, the DCA is just a middleman. It's like an escrow person. They don't want to take responsibility between the seller and the buyer agreement or any stipulation inside the agreement. So they just want the buyer to sign this agreement, this clause, so that way if there are any misrepresentation, there's recourse. So that means the DCA is off the hook on that, and the buyer and the seller has to kind of figure it out between them two. So they don't want to be involved, basically. Okay. The buyer will receive the property clear title. So the buyer don't have to worry about, oh, there's a cloud in title or anything like that. Again, the DCA is just a third party. They're not on title whatsoever. Okay, they're just a third party involved in this transaction. They're just facilitating the transaction. Okay. So let's look at step 4, and you will understand how this all kind of tie in together. Okay. So step 4 is basically the buyers buy the property from the DCA. So the DCA receive $1 million. And then remember, this is only for 30 years, okay? So the DCA will receive $1 million from the sale to invest for the next 30 years. And people ask me, okay, well, how does this all work? Does DCA, what if, they disappeared, or, so on and so forth, how does a seller will be off the hook? Where the $1 million go? 30 years is a long time. People go out of business all the time. So how does this all work? What is my guarantee? What are in place to make sure that everything follow through on their end of the bargain, and what they set to do, they will do it, right? So this is where the beauty of the private lender, and this is how they make sure that their money is recaptured at the same time. Okay. So again, remember I told you I'm going to do the math in a little bit, but I'm going to show you how the DCA makes money. Okay. Remember that DCA pays out 5.7% on the interest only note for 30 years to the seller. So every year, the DCA pays $57,000 of interest to the seller. Now, this is all on paper, okay? Any money that they earn above the 5.7 interest rate, they keep. So that's how much they make, right? And then remember how the private lender only lend the seller 95% of the 100% proceed? Well, the 5% that's being kept, right? That's it's basically a bonus to the DCA at the end of 30 years. So the end of 30 years, DCA gets to keep $50,000. Okay, they're only able to keep that $50,000 at the end of 30 years, not before. So how they keep that is basically when they pay off. I'm gonna show you the math right now. I think this is where we're gonna go into, and you will see how it all works out. Okay, I don't want to spill my water. Okay, how is this possible? So DCA will pay off the private lender. Remember, the DCA got $1 million, right? So the DCA will pay off the private lender of $950,000, which will trigger, quote unquote, the final step of the process of this M453. Seller will need to pay capital gain tax at this point. Okay, so remember, the seller defer their capital gain for 30 years. Okay, so they defer this tax for 30 years. So now once the DCA pay off the private lender, it triggers the final steps in the IRS process that the seller now need to pay the capital gain tax, okay? The $50,000 will be kept by the DCA as a bonus only after they pay off the private loan. So remember, the DCA only get that 5% at the end of 30 years when they pay off the $950,000 loan that the private lender lend the seller. The private lender has put 3 escrows in place. I forgot to put an S at the end of escrows. So remember how people say, I said that, well, it's 30 years is a long time. How do you know people are going to still be in business, you know, et cetera, right? So remember, the private lender has a lot to lose. Why? Because they put out $950,000 to the seller, right, as a business loan. So how do they recoup the costs and things like that? Well, they put 3 escrow in place to protect their money. Okay, this is how it works. First thing, they open an escrow for money received. So remember where, you know, the seller need to pay the private lender 6%, right? Every single year at $57,000. Again, it's not about, you know, the seller sign a check every single month to the escrow company that received the money, right? It's all paperwork, right? Why? Because the DCA is the one that's holding the $1 million from the buyer, and they are investing that money. So anything above the 5%, 5.7%, because the DCA pays, right, the seller 5.7%. So anything above that they keep. So anything that left over, it stays in the escrow account. Okay. Escrow for money payable. So remember, so they receive, they pay out. So the escrow kind of wash themselves. Okay. And the last escrow is for the final payment. Okay. And it's very important that the money is in there so that way they can trigger the final step. So that way the seller pays the capital gain tax at that point. Okay. So the money never really leave escrow per se, right? So every time the money goes out and comes back in, anything above that 5.7% that the DCA pays the seller, the DCA keeps. Other than that, it stays there. So that means the money is always in escrow. So basically, it's just sit there, right? It doesn't go nowhere per se. The DCA does have a right to take the money out to invest in it. So that way they can receive money over 5.7 interest rate. And I'm going to show you how this all works. Even let's say you throw the money, $1 million into a very conservative, stock market fund, you receive a little bit higher than 5.7, throughout the years of 30 years anyway. So technically, remember, the seller is receiving interest only. So it's not compounded. It's only interest only. So every single year you receive $57,000. The investment is compounded, right? So just like, if you guys, whoever is an investor or have took some of my classes, have attended some of my investment classes, financial freedom classes, you understand the power of compound interest. Okay, because the compound interest is so powerful that pretty much people double their money every 10 to 12 years. All right, so that's the reason why even at 5.7 interest rate that they're paying you, remember that's interest only, so there's no compound involved. So you're only receiving $57,000 every single year, and that's it, right? So the compound side of it, that's the reason why the DCA has. That's why this makes sense, and this why this works is because they make a lot more money than that 5.7% that they pay out. All money are held in escrow, and DCA can only keep what they earn above the number on step 1, which is 5.7%. So remember, the DCA can only keep what they earn above the 5.7% on step 1, which they pay the seller. Anything other than that, it stays in escrow. Okay, I'm going to give you the math here. Let's say that for every 100K in taxes that we can save your seller and earn 5%, it would be worth about $430,000 in 30 years. So this is the reason why it works. Just imagine $100,000 that we save in taxes, right? Mediocre 5%, right? You look at the life of it, 30 years, that 100,000 become $430,000. And this is the reason why this works. Okay, if we use the standard inflation rate of 3%, you would discount that tax by 60% or 40 cents for every dollar. So again, even that, you're still doing well. But again, as you can see, inflation fluctuates all the time. If the DCA has an agreement with the private lender to invest a certain way, so that way they will always make above that 5.7, because again, the private lender has everything to lose, right? They're the one that fork out the $950,000. They don't really have any collateral per se to kind of like, the property is already sold to the buyer. The buyer is ready to hold title, is clear. There's no cloud on title, right? The buyer can do whatever they want with the property. Has nothing to do with the private lender, has nothing to do with the DCA, nothing to do with the seller. Buyer has clear title of the property that they bought for $1 million. They move on. The private lender has everything to lose. So therefore, the private lender and the DCA, they both have an agreement that, they need to invest certain things, certain places, so that way they can earn a certain amount of return. So that way the private lender money is not lost, number one. Number two, that they earn above that 5.7%. So that way the DCA makes money. And then at the end of 30 years, they receive that 5% bonus as well. Okay. This strategy can be used as an alternative to the 1031 exchange. Again, people know on the 1031 exchange, you have 45 days after the sales of the property. You have 45 days to find a like kind property, right? And then you have 180 days to close on that property, right? So you have a 45-day restriction to basically identify the property to exchange for your current sale, and then you have 180 days to close on that deal. So those are the restriction. But again, there's more restriction. I'm not going to go into that in this session. I'll go on that next week, next Saturday, where we will go more in details about the 1031, the rules and regulation on that, what the stipulation are. So on this one, we're not going to go in that. We're going to do in the M453. Let's stick with that. So this ends my Saturday live session at 9:30 today, guys. I know we did about half an hour. I know the M453 is a lot of information. I hope this brings to you abundance of knowledge, so that way you can give your client options that, instead of doing a 1031 where they have to use 100% of the proceed to roll over to the next property, but then everybody thinks, oh, that's the only thing you need to do. No, there's other stipulation into that, equity base, debt base. We're going to that next week. Why that's important, because I'm going to give you a quick overview of the 1031 about what I just mentioned about, debt base, right? So let's just say you have an investment property as $1 million, you owe 500,000. Okay. So when you do a 1031, you identify the property. Let's just say you give a like kind property, right? And then you need to, you buy the property. So normally it's the same value or higher, right? So let's say you buy the property at 1.1 million. Okay, so you buy a 1.1 million, you sold your property for $1 million, you have a debt on your current property of 500,000. Okay, so the next property that you buy, you must have the same debt, right? 500,000. You have to roll that $500,000 over as a debt, so you can't borrow more than a certain amount over there as well. All right, so not only you have to buy same value or higher in like kind, but also debt. And then we have to talk about equity base on that, or else it will trigger, we call it a boot. So I'll go into more details next week about all that 1031 exchange, what are the rules and regulation, what items you need to be careful about, what are boots in 1031 exchange. Again, anything that you hear today, again, please talk to your tax accountant. They should know about this stuff. Talk to your attorney to make sure that if it qualifies for you. Let me see. I just got a a chat box. Tammy, say thank you. Great. Actually, yeah, I just want to say, Tammy, thank you for bringing to my attention on this, because it is a very informative option for a lot of our clients. A lot of agents don't know this, and all they hear about 1031, 1031, 1031, right? Which is great. It's not a bad tool to use, but 1031 is not the only tool that we as realtors or brokers can use to help our community, create more wealth. Okay, because it depends on your current situation. And I'm gonna go through, the 1031 next week about why you should not do a 1031, right? So we're gonna go in next week, next Saturday, live at 9:30 Pacific Standard Time on YouTube Live again, same channel, same everything. We're gonna go through 1031, why you should not do it, what are the rules and regulations that you need to use, that you have to meet to use 1031. So next week, join me Saturday live at 9:30 a.m. Pacific Standard Time, same place. Please like and subscribe to our channel. Make sure that you click on the notification bell, so that way when we issue a video or something like that, you get the most updated information. Invite your friends. I invite all of you to use the chat box, call in, so that way we have you can answer all your questions that you may have. Other than that, anybody have any questions, you'll feel free to type in the chat box or give me a call. I'll stay on for another maybe a minute or so, and see where we at. And if there's anything that you guys want us to cover on our next session, please let us know. We'll make sure that we'll cover it. There's another thing that we want to invite. We invite all real estate agent, regardless of which office you work from, right? Tammy's from Realty World. I think that she just switched to Intero. So she was on our show. We might have another agent from another brokerage coming maybe next week. So I mean, we welcome you guys to come on board. Oh, I forgot to before I forget, we have a property in Saratoga that's going on off market, a 5-bedroom, very nice property, flat land, over 10,000 square foot lot. Off market value on that is, you can do a resale on that. It's about I like to say about 2.5 to a little bit over that, 2.8 to $3 million easy in Saratoga. This property, you can do a quick rehab and addition to it because it has so much land, ADUs, things like that. So please give us a call or send us an email, and then that way we can give you some more details about that. We have a commercial building that is a very good for office use, attorneys, tax preparer, real estate, mortgages. It's about 1,800 plus square footage in North San Jose. Please let us know. It's a condo unit, condo commercial. We also have I think we still have that Los Gatos lot. I'm not sure we still have it, but let me know. It's a duplex on a lot. A city of Los Gatos approved to build a single family resident with an attached ADU, total 3,500 square foot. Resale on that is $3.8 to $4.2 million. That property is going for 1.8 million right now, that I can tell you about. Other than that, any other property, anybody realtor out there that want me to announce, go ahead and type on the chat box. I will definitely announce that for you guys. We have a condo. I don't know if that's sold yet. Nancy from Intero has a condo in North Valley, very clean unit, move-in ready, 2-bedroom, 2.5 bath, recently upgraded kitchen. You have a small private backyard. Very nice property. I'm surprised that property hasn't been sold yet, but I think it might be sold this week because I overheard her getting some offers coming in. So Nancy from Intero. Anybody has properties that want to announce or coming up? Like to share? No? I'm looking at my screen, guys, so hopefully All right, so it looks like we're good. We're gonna wrap this up. I hope everybody enjoy their Saturday. Again, help keep each other safe out there with all the violence that's going on, that's targeting Asian American. I hope that everybody can live together as one. um we all want to say is like, can't we all get along here? We have only one world that we share with each other, so please, help each other live this life to the best of our ability, and stand up for each other. If you see anybody who needs help, definitely try to step in if you can without getting yourself in harm's way. We like to make sure that you guys are safe. Other than that, see something, speak up, and help each other. Wear your mask, keep your distance, continue to be safe. We're almost there, guys. We have 100 million shots vaccine into American arms so far. So we hope that, everybody will get back to normalcy very, very soon. Hope everybody have a great Saturday and be safe.